Hello everybody, welcome to Talk About Houses. I'm Todd.
I'm Oana.
Today we are going to talk about the real estate market in Las Vegas, and we're going to do an update for August. We're going to just go over all of the statistics in the real estate market.
Right.
Okay, so let's start out. We know you guys love slides. So we're going to put up the first slide right now. This is the Market Action Index. You can see the date on there, Sunday, October 1st, 2021. The big thing I want you to get out of this is this needle. It's still pointing to seller's market. But if you look to where it says last month, when we did this video last month, it was more closer to 80 and now it's 75.
Right.
And what does that mean?
So it's a couple different things. It means that the market is taking just a small breath, okay? It is taking a small breath. People are pulling back a little bit. And that's for several reasons. One, of course, is because the market has gone up like a rocket ship.
Yep, for the last kind of year maybe.
Right, and it needed to take a breath. And the second reason is that it's seasonal. So people who were looking to be in their homes by the time school started, or by the time that whatever cutoffs that there were for school registration, that sort of thing, they've gotten those homes, they're getting settled, they're closing on them, and they're kind of all squared away. So that's taken some people out of the market. So we had this whole frenzy, which is very typical. There's a frenzy in the spring, so somewhere between March and June, those are the hottest months to sell homes and buy homes because people are trying to close before the school year begins and that sort of thing. So it's those two things, a breather and seasonal.
What's interesting about this is that there's a comment down here at the bottom that says, unless that needle starts dropping significantly or it goes to where it says buyer's market, that means that it's unlikely that there'll be downward pressure on prices. So the goal here is that the market get healthy again. It was a little irrational, but if if this is just a correction to how the market should be, and it's very possible that we've been low, and the market just said, you know what, we need to correct, and it corrected, and now the goal is a soft landing, because no one in real estate wants to see erratic markets. The worst thing you can have in real estate, either as an investor or an agent or anybody, is erratic market, especially as a homeowner too, because you don't want the market to take off and collapse and then now you get transferred and you need to sell your house or something. Okay, so we're going to jump to the next slide here. Now this is a real-time market profile, and all of these numbers come from Altos Research. They're updated every day, so we just grabbed today's numbers. Median list price $492, but the median price of new listings is $425. So Oana, why is the median list price so much higher than just the median price of new listings?
So sellers have figured out that the market is stabilizing and that maybe they cannot necessarily one-up their neighbor anymore. And the market is finding its footing as to where the values are. So they're not going, hey, Joe down the street sold for X, so I'm going to put my house on the market for X plus Y.
Yeah, and then the other thing too is that, remember, when three houses come on the market, 300,000, 600,000, $1 million, the 300,000 would sell first because it's got more people that can buy it, right? Because you can buy the 600, you can buy the 300, but you can't. If you buy the 300, you may not be able to buy the 600. So the homes disappear quicker. So that 425 is the more realistic number for the median prices, because that's just the median price of a brand new listing. And then, of course, homes that are on the market longer tend to be the more expensive ones. And homes that disappear quicker, the stuff like under 300,000. Price per square foot, $229. That's an interesting number because I don't think it was that high back in 2005, but we had a much different real estate market in 2005. And this seems to be a little more supported by actual, well,
it's actually supported by economics, right? Because we are looking at what homes are really worth. Look, what these reports are really boiling down to is a market stability, which is something that we've been looking for a long time.
Yep.
So this is not a bad thing. This is simply the market stabilizing, which is good for everyone because stability means a little more certainty, and a little more certainty makes makes it easier for people to make decisions and make rational decisions.
Here's another really good one. Price decrease. You can see it's up 24%. What this means is 24% of all listings, they had to decrease the price.
It's called reality check.
Yeah, so some of that may be unrealistic expectations, or well, we'll just list for higher, and then no one sees the house and they say, hey, maybe we should drop the price. Only 9% had a price increase, so that's good too. And we've seen that too, where it just comes on the market and they get way too many offers. They're like, you know what, I think we mispriced it, let's raise it. Inventory of 2226 is still low.
Very low. When you consider the size of Las Vegas, that's a very low number of homes available for sale for a market that's over 2 million people.
And here's the most important thing. This is the main number we're going to track for forward looking, bubble market crash or anything where prices decline. It always leads to inventory. You never just have prices tank. You only have prices tank as if you get too much inventory, because the homes get absorbed. They get purchased for market value. And right now market value is what all the homes are selling for. So until we see inventory get to like 16 or 20,000, I'm not too worried about it.
Right.
Really not worried about it.
It has to be a reasonable amount of inventory for the size of population in order to have a reasonable absorption rate. We're looking at a healthy absorption rate is several months, not several days. And that's really what we've had for, close to a year now.
Median rents, $2,033. That's that's pretty solid. That's for Vegas.
Pretty solid. It's a good bit of money, particularly when you consider that Las Vegas incomes are not that high. These are not California or New York incomes. So with that in mind, this is a pretty solid rent. So as an investor, hopefully you take some comfort in that our rent levels are substantial for what you can purchase a property.
And then if you look at this market action trend, this is the same thing as the needle graph we showed, but you can see that downward thing, and that's actually good. No one wants it really high, no one wants it really low. Like in a perfect world, it's at like 40 or 50 all the time, and it's just kind of, it's a good healthy market. But this is actually a good trend. They were seeing this kind of back off a little bit and not tanking. And what's going to happen is you see the inventory increase, you're going to see that market action needle swing over to buyer market. Yeah, because that's just naturally what happens. Okay, now we're going to get into the graphs.
Yes.
Now, a word of caution. I'm going to put the first graph up here, price per square foot. And you guys are going to freak out, okay? And you're pricing, whoa, look at the price per square foot increase. That's crazy. It's 4 times. No, it's not. Because the bottom of the chart here is 160. And right now it's at like it's at 220. So it hasn't really gone 4x. It's because if they made the chart so it was 0 to 220, it wouldn't be as impressive. So they shrunk down the chart. It starts at 160. But you can see definitely price per square foot was very steady and it's been increasing. But what's interesting is notice how looks like it's starting to level off.
Right, but really we don't have enough data to fully draw that conclusion, because we're only looking at really a month since this has happened. And again, as we said in the beginning, this is for a couple of reasons. One of them is seasonal, so we'll kind of see. But we do expect this to level off because, like I said, as we go into the rest of the year, the real estate market traditionally is not as overheated because we don't have as many people moving, particularly people with children in schools. So this is a seasonal thing that happens. So it does not necessarily mean that the market is going to decline. It just means it's leveling off, which is a normal thing for this time of year in the real estate cycle.
And what's really funny is back in January, February, when I was making these videos, the market update videos, and talking about how there wasn't really a bubble, I was getting hammered by people in the comments on the video saying, yeah, but nobody's working, everybody's out of work and all. Okay, so first of all, actually it's the opposite. Our unemployment's down to like under 5%, and we actually have job shortages, meaning we have companies that can't hire enough people.
Right. So particularly here in Las Vegas, when we have a big mega resort like Resorts World open up, they suck employees from the surrounding businesses and from the suburbs into Resort World. And then what's happened is particularly in the food service industry, we're seeing small restaurants and even medium-sized restaurants, even chain restaurants, that are actually hurting for employees. We've been to restaurants recently where we had been there before and had gotten great service, and then we went to these restaurants and they literally had one server for the whole restaurant. And this is not just one restaurant that's happened to us at, it's been several. We've spoken with the owners, we've spoken with the managers, and they all have the same story, that Resorts World is picking up people. They're picking up people from the surrounding businesses. They're also picking up people from other resorts on the Strip, and so then some people are filtering to other resorts on the Strip and that sort of thing. So people are going back to work. Clearly that's not the case in all industries, that's not the case in all markets, but here in Las Vegas we do have that situation. It's not uncommon for us to see help wanted signs in the window. It's very common at this point. So people are going back to work. Part of that is because some of the benefits have run out. Part of that is because people are maybe tired of all the reality TV shows. They've seen enough of them and they want to get on with their lives.
The other thing that everyone hammered me on was about the number of people in default. And actually that has dropped about 60%. So nationwide, these are nationwide numbers. In the last 6 months has been incredible because people have magically gotten back. They've either sold their house. So all those people who were upside down, and I said this on one of the videos, I said, if you were upside down, or not upside down, but if you're behind on your mortgage, you're going to do one to two things. You're either going to sell the house because you have equity, or you're just going to call the bank and negotiate some, put all the payments back at the end and get back on track with the house. Right. And it's so far, and I've got the data that I'll do another video on, but the data nationally is we went from like 4 million houses in default to like 1.7 magically in 6 months, when everyone was terrified over the defaults and there was this big wave of bank foreclosures were going to hit the market. And guess what? It's not going to happen now. Right.
So remember, those people that were in default, they simply worked out a deal, whether they sold a house or they worked out a deal with their lender and they're back on track, whatever that looks like for them. But for the purposes of reporting, those loans are now current or in good standing, however they're choosing to report them. So the number has dropped significantly, and this is good for everybody because we want people to be secure in their homes and that sort of thing. And we also don't want a whole lot of homes to hit the market at the same time because that hurts everybody.
This next slide, median list price, is very interesting because you can see the trend where it looks like it's leveling off there. You know, it's just kind of starting to like, hey, you know what? Maybe it's the list price will drop a little bit or it'll just level off, but not climbing is a good thing. Not having continued, and we saw this with the fact that more people are having to reduce their list price. Right. So I think what's happening is the market's getting a wee bit more competitive, just a little bit. Sellers are getting smarter and they're being, hey, maybe we should list our house at a competitive price.
Right. And this just speaks to market stability, which is good for everyone.
Yeah. List price is a leading indicator of value because if everyone's listed above the solds, the market's probably improving or increasing in value. And if the list prices are less, then it's probably declining in value. So this is stable. This is like the happy space for real estate agents. We like this. We don't like to see it. Everyone, I get all these people that say, oh, you just realtors, you always want to see bump the prices up. Like, we really don't want that. Like, it's absolutely like not something we want to do.
Look, we want stability. We want things to be predictable because we want the things that we tell the seller to actually come to fruition. Like everyone else, we like being right.
Yeah. Okay. Last slide here. The most important one is inventory level. As you can see, if you go back to 2019, that's a healthy level where that is. And then you can see just a couple months ago, it was really low, but you see how it's bottomed out and coming up. Inventory is climbing. It literally has to get on here, like off the chart before prices are gonna, because even when it was up here at 5,000 plus, and that's active listings in the MLS at one time, home prices were still appreciating. Right. So we're talking, this thing has to shoot up to over, it would have to be off this chart before we really saw enough pressure. And remember, the single family homes doesn't include condos or townhomes. So when you say, wait, that's 5,000, wasn't it more homes on the market? That includes condos and townhomes. That, like, maybe it was 12,000 was the total number.
Right.
Because there's a lot of condos and townhomes in Las Vegas. So this is kind of good. This is very good. This is sort of like we're seeing the soft landing stuff. And then we're also seeing that maybe this is seasonal, because the hot market, real estate markets tend to get hot in the spring.
Right.
That's the hottest time for a real estate market.
Right.
The fall is in the winter tend to be like, because there's not that much going on.
Right. And people don't want to move over the holidays. You know, once the kids go back to school, then the holidays start up, and nobody wants to put their house up for sale, and nobody wants to move. So it's a different kind of market at that point. I actually think that selling a home over the holidays works really well because you have less competition. And I actually think that homes show really well over the holidays because your homes are all spruced up and they're nicely decorated. And as a buyer, you have less competition because a lot of people don't want to move. As a seller, you have less competition because people don't want to put their homes on the market. So I think that there are good parts to selling your homes over the holiday, but that's a subject for another video.
Okay, so in summary, the market is cooling a little bit. It's still hot, but it's cooling. But it's not cooling tanking because of inventory. We don't see inventory screaming. No. And that's the main thing we're going to keep tracking. We get 5 or 6 months in a row of inventory considerably increasing, we might get worried about it. And then remember the other thing too, a slight price decline is not a crash.
Correct.
It literally would have to crash probably in our market over 100, like home prices would have to decline 100,000. If it's just slowly declined for a year or whatever, that's just a market correction to price. It's not a crash. A crash is you're here, this is stability, it goes up and then it crashes down below that. That's exactly what it did 2008, 9, 10. It crashed below that trend line of what normal home values look like.
Right.
Yeah.
So if this video is helpful to you, you know what to do. Hit the notification bell. Give us a big thumbs up, share the video, and above all, please leave us your comments. We want to know what your experience is in the market wherever you are. And if you leave us a comment, please tell us where you are so that we have some idea of what's going on where you are. We love hearing from you, and we'll see you on the next video. Bye.
Bye.